Federal government bond auction last week sold about 35 billion of a new 3-year bond at just over 13%. Now, why did DMO introduce this short tenor, and what is the significance for the market? Well, to review the fixed income space, I'm not being joined by Egie Akpata, head capital markets at UBA Capital. Thank you so much, Egie, for joining us.
Thank you for having me on.
Well, let's just quickly start, of course, with yields at the fixed income market today. What trend did we see today, and what's been the general trend right from Monday?
Well, I think the trend, if you look at the Treasury bill auction from Wednesday, the yields have come down a bit on T-bills. It seems as if the CRR on public sector funds, the 50% cash reserve ratio, is actually having an impact. The size of the T-bill auction on Wednesday was less than what you would typically have seen, and there's been a reduction in OMO activity. So the CBN policy seems to be working for now.
Now let's talk about this new 3-year bond. There was a new opening last week. The 3-year bond worth 35 billion auctioned by the DMO at 13%. Now, why did the DMO introduce this short tenor, and what's the exact significance for the market?
Well, I think it's really interesting. DMO bringing a 3-year bond. It's the initial debut of that bond, so it's priced at 13.05%. I think the good thing is that for issuers who want to come in shorter tenor, like one or two corporates that are in the market now and some that have issued in the past, there's a perfect benchmark to price off. Bear in mind that there are a number of issuers who have a challenge with the high interest rate environment, and so don't want to have themselves locked in for a long period. So this new issue is actually good, and it also shows that the DMO is trying to get shorter term money that is actually cheaper than the longer dated options that they've been issuing in the past.
Now, the Treasury bill auction issued on Wednesday suggests that the new CRR of 50% on public sector deposit funds seems to be working or having the desired effect of the CBN. Could you just briefly talk us through that?
Yes, so as I said earlier, I mean, the amount of money in the system has been somewhat reduced with the cash reserve requirement for public sector funds. And if you look at the size of the T-bill auction this week, it's a bit less than normal, less OMO activity, and rates again have come down. So there's been less supply of T-bills into the market, even at the primary auction. So I think on the short term, we can say it's working. We're not seeing the kind of impact we would have expected in the Forex market, but only time will tell whether that market will also start seeing a precision in the Naira, with fewer Naira chasing after these dollars.
But talking about the Naira, we're looking at the Naira still trading today at around 161 Naira 39 kobo. Now, obviously, this is a trend that has persisted, even though we've seen ample supply from the CBN W-DAS window, and of course some dollar sales from local units of multinational oil companies. The Naira continues to trade at this band. Now, it looks like it's maybe set to breach the 162 Naira band. Do you see this happening going into the new week?
Well, I think obviously some of these issues around the exchange rates are driven by reserve levels. Reserves are now down to about 46 billion. The trend on the reserve end has been downwards. It hasn't been upwards. And so obviously that will put some pressure on the currency, particularly for people who are trying to get in ahead for year-end Christmas type of orders. They're probably trying to get in their orders earlier so as to beat a situation where if the reserves keep dropping, the central bank will start having a challenge funding these auctions. So the trend on the Naira definitely has been somewhat worrying. But there hasn't been any drastic move, but the trend seems to be negative for now.
Okay, well, one of the reasons given for why the Naira continues to be under pressure, I've heard analysts say, it's the season that we're in. Parents are perhaps paying school fees, and of course people are traveling for holidays for summer. Perhaps when we go out of this cycle or season, as it were, we will see the Naira settle. But what do you think will be a good, comfortable level for the Naira to settle at away from the season?
Well, I mean, you always have something happening. I mean, by the time summer is over, you have schools resuming in September in most places. And then after that, people are making orders for Christmas. So you're always going to have one event driving demand. So really, I think the bigger picture is really around the reserve level, which has started to trend downwards. And that's with a depleting excess crude account. So when you look at the picture, the amount of dollars available in the system isn't growing, it's actually shrinking. And that is obviously what is driving a number of people to bid the currency lower.